Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, May 1st, 2024. So the Fed pretty much did what everybody expected. They didn't do anything. We saw the bots, like I warned in the morning notes, that it could be one of those setups where they are going to, no matter what he says, they're just going to squeeze the shorts because everybody was expecting a big sell-off after this. Well, we got the big spike, cleared out all the shorts, ran right into resistance, and came right back down again. So this is a reason why I really don't trade that much on Fed days. We took a couple verticals, debit spreads, because we were, when I had to run out, but the thing is we were making these big moves up and down, so we just would have been stopped out every time. So we were actually taking it on the long side. We did okay with it. I wasn't here for this one, nor would I have tried to trade it. But in any case, it was something that was expected. I think once all the shorts were cleaned out after this move, there's no more buyers left. So it's kind of telling us something where, the bulls are really lacking any buyers. Just like when we were on the way up, there was no sellers. So it's going to be kind of interesting in the next couple weeks, because I'm anticipating that May is going to be a pretty ugly month. And as if you've been listening to me, I've been saying my real target is going to be down at the 47.62 level, and if they lose that, down to the 46. But you can see the Bears have a lot of work to get down there. But the thing is, if they can take out these lows, then as I was saying, we have some support at 49.15, but then it comes all the way down to the 48.50, and that's within spitting distance of the downside target. You can see momentum. We were very oversold here, got into very overbought levels, and guess what? We're actually closer to the bottom than we are the top, and this thing is just crossing over. So if I was going to be, guess, this is a pretty bearish candle right here. It's an inverted hammer, and it's one of those things that I just think that we're going to, if we open up down tomorrow and we start testing these 49.84 or even coming down to the 49.54, they're going to be taken out, and then we're going to start hitting the next support levels. But right now, if we take a look at the 60-minute chart, we didn't have any buy signals here. So if these lows are taken out, we're probably going to get some buy signals. And what may be, kind of setting up is if say we come down to these levels and then bounce back up, it really could be a head and shoulders pattern. So that's something we want to keep an eye on. On the 15-minute chart, we had some buy signals here. This is why I was looking on the upside. But once we got into the overbought levels, again, sellers just stepped in, and now, they still have a ways to go on the 15-minute chart to get that into the oversold levels. So it's going to be interesting right now what the bulls have to do. Unfortunately, they're going to have to get it above the 50.88, which that was a spike here, and the Bears are going to have to get it through this 50.14. If they do, 49.91 will be in play, and then these lows here at the 49.52. So right now, if I was going to try to choose who's going to win this battle, I'm hands down would be going with the Bears on this one, because they have momentum going on their side. There's lack of buyers. There's not really any news that can jar to get the bulls all bulled up. And, I think shorting rallies is going to be your best way to go. And if you can get if you can build a short anywhere in between, say, the moving averages here, the 50.53 and the 50.65, it may be a good trade, because it seems like they're really just selling the moving averages right now. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.